Welcome to today's video, where we're diving deep into the world of crypto arbitrage platforms. If you've been wondering how to make consistent profits in cryptocurrency without the stress of predicting price movements, then arbitrage trading might be exactly what you need. But first, let's understand what arbitrage actually means. Imagine you walk into one store and see an iPhone selling for $800. Then you walk across the street to another store and find the exact same iPhone selling for $850. If you could buy it from the first store and immediately sell it to the second store, you'd make $50 profit with zero risk. That's arbitrage in its simplest form. Crypto arbitrage works the same way, except instead of physical stores, we're talking about cryptocurrency exchanges. Different exchanges often have slightly different prices for the same cryptocurrency. These price differences exist because each exchange operates independently with its own supply and demand dynamics. Here's a simple example. Let's say Bitcoin is trading for $42,000 on exchange A, but on exchange B, it's trading for $42,100. You could theoretically buy Bitcoin on exchange A and sell it on exchange B, making $100 profit per Bitcoin. That's crypto arbitrage. Now, you might be thinking, this sounds too good to be true, and you're right to be cautious. While arbitrage opportunities exist, they're becoming increasingly rare and competitive. The cryptocurrency market is maturing, and price differences between major exchanges are usually very small and disappear quickly. In 2025, with the crypto market more dynamic than ever, arbitrage trading remains one of the smartest ways to earn consistent profits. However, success depends heavily on choosing the right platform and understanding the challenges involved. So what are the main challenges that arbitrage traders face in 2025? Let me break down the biggest obstacles that can make or break your arbitrage strategy. Challenge number 1: speed. The cryptocurrency market moves incredibly fast. Price differences between exchanges often last only seconds or minutes. By the time you manually spot an opportunity, calculate the potential profit, and execute trades on multiple exchanges, the opportunity has usually disappeared. This is why most successful arbitrage traders rely on automated tools and bots. Challenge number 2: transaction fees. The cost of arbitrage trading is directly correlated with the fees exchanges charge for trading. Usually the fees range from anywhere from 0.1% to 0.5% per order. When you're making multiple trades across different exchanges, these fees add up quickly. A 2% price difference might seem profitable, but after accounting for trading fees, withdrawal fees, and potential network fees for moving cryptocurrency between exchanges, your actual profit might be much smaller than expected. Challenge number 3: capital requirements. Effective arbitrage requires you to have funds available on multiple exchanges simultaneously. You can't wait to transfer money between exchanges when an opportunity arises, because the price difference will be gone by the time your transfer completes. This means tying up significant capital across multiple platforms. Challenge number 4: market volatility. These price differences emerge due to varying levels of liquidity, regional market dynamics, and the decentralized nature of cryptocurrency trading. However, the same volatility that creates arbitrage opportunities can also work against you. If the market moves significantly while you're executing your trades, you might end up with losses instead of profits. Challenge number 5: platform reliability. Not all crypto exchanges are created equal. Some have frequent downtime, slow execution speeds, or poor customer service. Choosing unreliable platforms can result in missed opportunities, or worse, stuck funds during critical trading moments. Challenge number 6: regulatory and security concerns, security risks. Using third-party bots involves sharing API keys, so it's crucial to ensure the bot service has strong security features. Many arbitrage strategies require giving third-party platforms access to your funds or trading accounts, which introduces security risks. These challenges explain why many traders struggle with arbitrage despite its apparent simplicity. The key is finding platforms and tools that address these specific problems. Now let's explore the top crypto arbitrage platforms for 2025. I've researched and analyzed the most popular options, considering factors like speed, fees, security, and user experience. Category 1: arbitrage scanning tools. First, let's talk about arbitrage scanners. These tools help you identify opportunities across multiple exchanges in real time. The most popular option in this category, monitors over 40 exchanges simultaneously, providing real-time alerts when profitable opportunities arise. Its customizable filters, wallet analysis, and instant alerts let traders manually execute trades securely, maximizing profits without auto-trading risks. What I like about scanning tools is that you maintain full control over your funds. You see the opportunities, but you decide whether and how to act on them. The downside is that manual execution is often too slow for the most profitable opportunities. Category 2, automated arbitrage bots. Crypto arbitrage can be a consistent, profitable source of income. However, you can automate the whole thing with crypto arbitrage trading bots. Automated bots are designed to execute trades faster than humanly possible. A good bot should provide access to multiple exchanges, automate buy and sell orders efficiently, and offer reliable customer support. One of the leading platforms in this space supports over 17 exchanges and offers sophisticated arbitrage algorithms. The platform handles everything from opportunity detection to trade execution, but you need to deposit funds and provide API access to your exchange accounts. Another popular option focuses specifically on triangular arbitrage, which involves trading 3 different cryptocurrencies in a cycle to profit from price inconsistencies. This strategy can be particularly effective during high volatility periods. Category 3, exchange-based solutions. Some major exchanges now offer built-in arbitrage tools. These platforms provide direct access to multiple trading pairs and advanced order types that can help with arbitrage strategies. The advantage of exchange-based solutions is that you don't need to trust third-party platforms with your funds. However, you're limited to opportunities within that exchange's ecosystem. Key features to look for when evaluating arbitrage platforms. Here are the essential features you should consider. Speed and latency. The platform must execute trades in milliseconds, not seconds. Exchange coverage. More exchanges mean more opportunities. Look for platforms supporting at least 10-15 major exchanges. Fee structure. Compare trading fees across platforms to ensure you're not losing significant profits to hidden costs. Look for transparent pricing with no hidden charges. Liquidity requirements. High liquidity. Ensuring fast and efficient trades is crucial for successful arbitrage. Security features. 2-factor authentication, API, key encryption, and withdrawal limits are non-negotiable. Customer support. When dealing with time-sensitive trades, responsive customer support can save you from significant losses. Platform comparison. Let me give you a realistic comparison. Scanner-based platforms typically charge $5,200 per month for premium features. They're great for learning and small-scale trading, but require manual execution. Automated bot platforms usually charge 10 to 30% of profits or monthly subscription fees ranging from $100 to $500. They're more suitable for serious traders with larger capital. Exchange-based solutions often have lower direct costs, but may have higher trading fees and limited arbitrage opportunities. After extensive research and analysis, here's what stands out as the best approach for crypto arbitrage in 2025. The winner, hybrid approach with established platforms. Rather than relying on a single platform, the most successful arbitrage traders in 2025 use a combination of tools. Here's why this approach works best. First, they use scanning tools to identify and learn about market patterns. This helps them understand which exchanges typically have the best opportunities and at what times. Second, they focus on 5 major exchanges with high liquidity and reliable uptime. Having accounts on too many exchanges spreads your capital too thin and makes management difficult. Third, they use semi-automated tools that provide alerts and suggested trades but allow manual execution for better control and security. Why this approach excels? Risk management. You maintain control over your funds while still getting the speed benefits of automated detection. Cost efficiency. Instead of paying high fees to fully automated platforms, you pay lower fees for scanning and execute trades directly. Learning opportunity. Manual execution helps you understand market dynamics and improve your trading skills. Flexibility. You can adjust strategies based on market conditions and personal preferences. Realistic profit expectations. Gains from arbitrage trading tend to be marginal rather than significantly large. In 2025, realistic profit expectations for retail arbitrage traders are 0.1-0.5% per successful trade. With 10 and 20 trades per month, experienced traders might achieve 2 to 8% monthly returns, but this requires significant capital, time, and expertise. Important reality check. Arbitrage is not a get-rich-quick scheme. It requires dedication, continuous learning, and often significant capital to generate meaningful profits. Many beginners overestimate potential returns and underestimate the complexity involved. Let's recap the key points from today's discussion about crypto arbitrage platforms in 2025. What we learned about arbitrage. Crypto arbitrage involves profiting from price differences between exchanges. While the concept is simple, successful execution requires the right tools, strategies, and realistic expectations. The main challenges: speed, fees, capital requirements, volatility, platform reliability, and security concerns are the primary obstacles traders face. Understanding these challenges is crucial for success. Platform categories. We explored 3 main types of platforms: scanning tools for opportunity identification, automated bots for hands-off trading, and exchange-based solutions for direct trading. The best approach: a hybrid strategy combining scanning tools with manual execution on established exchanges offers the best balance of control, cost-effectiveness, and profit potential for most traders. Critical success factors. Start with small amounts to learn the process. Focus on major exchanges with high liquidity. Always account for all fees in your profit calculations. Maintain realistic profit expectations, prioritize security, and never compromise on platform reliability. Final thoughts. Crypto arbitrage can be profitable, but it's not suitable for everyone. It requires technical knowledge, significant time investment, and often substantial capital. For beginners or investors with limited capital, starting with smaller trades and simple strategies is likely to be a better option. If you're serious about arbitrage trading, start by paper trading or using very small amounts to gain experience. Learn about exchange fees, withdrawal limits, and transfer times. Most importantly, never invest more than you can afford to lose. The crypto market continues to evolve, and arbitrage opportunities are becoming increasingly competitive. However, for dedicated traders with the right approach and tools, profits are still possible in 2025. Before you go, I want to hear from you. Have you tried crypto arbitrage trading? What platforms have you used, and what were your experiences? Leave a comment below sharing your arbitrage journey, both the successes and the challenges you've faced. If you found this video helpful, please give it a thumbs up and subscribe to the channel for more in-depth cryptocurrency content. We publish new videos every week covering trading strategies, market analysis, and platform reviews. Don't forget to hit that notification bell so you never miss our latest updates. The crypto market moves fast, and staying informed is crucial for successful trading. For those serious about starting their arbitrage journey, stay tuned and don't miss out. Thanks for watching, and I'll see you in the next video where we'll dive deep into automated trading strategies.